We live in a fantasy world now. Reality has been destroyed.
This is the time that we really need to pay attention.
The probabilities are overwhelmingly on gold's side.
That is the best environment to see gold increase its value.
Welcome to Palisades Gold Radio. I'm your host, Tom Bodovix. Joining me today is Chris Irons, host of the Quoth The Raven podcast. How are you today, Chris?
Doing great, Tom. I'm really happy to be with you, man. I love your show.
Thank you very much. I appreciate it. And, I love yours too. And you and I were talking off air a little bit about how we have very different styles, but I think there's a place for both. And I have the utmost respect for your ability to just kind of riff on thoughts that you have, and the market's everything that you're able to present.
Yeah, well, I like your show because it's the opposite of mine. It's well-researched. It's calm. It delivers cohesive points in calculated fashion. It's well thought out. It's short. There's not a lot of advertisements. So it's like the total opposite of my show, which is why I think I love to listen to it so much, is because you're talking about the same subject matter that I talk about a lot, which is being critical of the central banking system and, talking about precious metals and talking about Bitcoin and things like that. But you deliver it in a great organized fashion. Whereas, I deliver my content in a fashion where usually I just take a couple of swigs of a bottle of brandy and then let it rip. So you got your act together a little bit more than I do.
Well, maybe two sides of the same silver or gold coin. So, Chris, why don't we start by getting a little bit about your background, how you came into learning about this stuff, and really kind of what has led you to this place?
Well, I started as, just kind of an outside observer of markets when I was 18, 19, 20, learned to invest kind of on my own, did a very poor job of it, lost a lot of money. And then eventually down the road, made my way through undergraduate school, graduate school, and then I went to go work investor relations for a small startup company up in Niagara Falls, New York. And that kind of got me familiar with the public reporting process a little bit better than what I had learned. Working in investor relations, you're pretty intimately involved with disclosure rules and SEC filings and things like that. So I was able to really get an in-depth look at how a public company functions versus just kind of being an outside spectator. I left that company in, I think, 2013 or 2014, somewhere around that time. And I went to go work for another company that was doing research exposing US listed China-based frauds, companies that were listed here in the US that were basically duping American investors. And it was from there that I kind of learned about short activism and doing all of the due diligence that the sell side doesn't do. And then, from there, you unfortunately kind of learn that the whole system is just the Wall Street machine packaging up and doling out whatever it can get its hands on, auditors, exchanges, analysts, just doing everything they do to get fees, regardless of the underlying quality of whatever crap, whatever shit sandwich they're packaging up and handing to retail investors. And, that was kind of disheartening learning that process. But I went through that and I worked for this company for like 5-6 years, basically debunking companies that either on their face were presented to look great, but didn't have any substance to them, or were just committing egregious fraud that nobody had noticed. And what I did from there was, when I started to learn more about macro, because I was learning essentially about individual companies and, what makes this company suspect? What makes this company prone to bankruptcy? Why is this company violating disclosure laws? As I learned about those things, and then started to learn about macro, and all of the same kind of like bullshit detector alarms went off when I was trying to learn about the global economy, and I'm like, all right, well, what's going on here? You have, 11 central banks around the world basically running a Ponzi scheme is the best that I can deduce it. I mean, unless I'm missing something here. And so it started to, as I learned more and more about macro, it started checking off all the same fraud boxes that I would check off when researching an individual equity. And so, I came to the unfortunate conclusion that the global economy appears to be the world's largest ongoing, chain letter, right? It's the world's largest ongoing Ponzi scheme. It's baffling. And not only is it baffling to wrap your head around, because that's the first thing you think is like, I can't be the only person that sees this, right? Maybe I'm getting it totally wrong. But no, it really is as bad as it looks on its face.
And just to kind of interject there for a sec, Chris, of course, I do a lot of research before my interviews, and you have a presentation on stage that you called the bullshit economy. And in it, you said that you were raised really respecting the laws of economics, not living beyond your means. And for some reason, that doesn't apply, quote unquote, in the macroeconomic sense, right? And that's exactly kind of what you're explaining here, is that it just, for some reason, when you apply it to macroeconomics, all of a sudden, all those, laws of economics go out the window, right?
It's really weird, right? Because on like your personal scale at home, like if you're head of household for a family, well, what do you want? You want to own some assets. You want a house that has a balance sheet that's in order, and you want to have a good job so that you have a steady flow of income. And the whole point of setting a budget is to make sure that you're spending less than what you bring in, right? So that you can put money away, you can save, you can use those savings in the future for, investment in your family, or in case of emergencies, or, to put your children through college, or if you need to buy a car at some point. So on a personal level, and the way that I was raised was save your money. And, you go out, you buy a house, this was like pitched as the American dream. You start to get some assets underneath your umbrella. You have a positive net worth. And that's why people always say, oh, go get a good job. Well, why do you need a good job? Because you need a steady stream of income. Okay. So what do you want? You want a balance sheet that looks tidy, and you want an income statement, essentially a personal income statement where you're profitable, where you're earning more at your job net of taxes than you are spending. You're earning more than what you need to maintain your quality of life. And when you look at things on a corporate level, for the most part, the companies that we grew up with that were, blue chips growing up, right? Your Microsofts and your Procter and Gamble's and Johnson and Johnson and 3M and, and even smaller startup companies. Like, the climate has shifted a little bit, but the general gist of things when you're a company is if you're not consistently turning a profit and you don't have a balance sheet that's in order, the value of your stock is going to decrease meaningfully. You'll either have to dilute it by selling it to fund your business, or investors are going to have no interest in owning your equity because there's no recurring cash flow stream. There's no reason to own it. The equity it's not worth anything. So why is anybody going to bid it up? So on a personal level and on a corporate level, that makes sense. Yet when we shift our view to the macroeconomy, and in the United States specifically, it's as if all of those rules have been thrown out the window, right? We have enormous trade deficits. We have a balance sheet that's just completely tits up, right? Like heels over fucking head, our balance sheet. It's just, we're fast approaching $30 trillion in debt, and we are spending far more than we're bringing in tax revenue. So, on a personal level, okay, like the American dream is pitched as a good balance sheet and having a good job. And on a corporate level, you want to own stock in companies that are, generating income and that have sound balance sheets. But then when we zoom out to the macroeconomy, something changes. Right? It's okay to have all this enormous debt and to keep raising the debt ceiling. It's okay to spend more than we're bringing in tax revenue. And that just doesn't make sense. And, what we've done over the last 3 or 4 decades with the aid of the academic world and the aid of, whatever Keynesianism has kind of mutated into in modern monetary theory is we kind of decided that we're going to be okay with this. And so now what the world of economic theory is just working our way backwards and trying to make up excuses for why this is okay, instead of just addressing the problem at its root, which is this can't last forever. This is a mathematical impossibility. At some point, something will give. Either the currency will give out, or, our status as a debtor nation will be called into question by another country or the dollar, like I said, will lose reserve status. Something will happen. Something will give. We're supplementing our lack of income and tax revenue by printing the difference. And, that's a convenient kind of temporary Band-Aid if you're a politician or you're an elected official, because you may not understand what the consequences of that are. And it's a nice way to kind of try to keep everybody happy and offer up the diluted notion that we can pay for all of this stuff when we can't. But the fact of the matter is that the more money that we print, the more prices are going to rise. And then that becomes even more nefarious because it then becomes a tax on everybody in the nation. And the unfortunate thing is not everybody in the nation understands. I would say a majority of people don't understand what is happening and why prices rise and how that is a tax on them. And so as the water level starts to come down a little bit in the pool and everybody's quality of life sinks kind of collectively, but for the people in the upper class or the very upper class, as a result of prices rising, that's occurring and everybody is suffering collectively, silently, kind of almost in the background in these tiny little increments that nobody notices because the government is doing too much, spending too much, and we have kind of either willingly or through negligence or ignorance convinced ourselves that the laws of economics don't apply on the macro scale. And it's extremely dangerous and it's terribly nefarious. And I don't know, it's one of those things that once I've wrapped my head around it, I can't unfuck my brain about it. I've just been annoyed about it. And I take it personally. And I've taken it personally for years because it only works if you assume that the citizens of the country are stupid enough to never figure it out. And I feel like between what the Fed and the Treasury does on a regular basis, that's their attitude. I think their attitude is, we can just say whatever we want and we're never going to be held to account for being liars. And you talked about my speech in October of 2019. When I did the Our Bullshit Economy speech, the Fed had just started assisting with that repo facility. This was before the pandemic. And Jerome Powell was telling the world then that, that wasn't quantitative easing, right? Even though they were easing quantitatively, that for some reason was not quantitative easing, right? The intervention in the repo market was not quantitative easing. And I took offense to that and I called him a liar on stage. And lo and behold, 6 months later, in March of 2020, we were staring down the barrel of unlimited quantitative easing, which is what we're in the midst of now. And here we are 18 months later, and we've printed something like 30% of the entire M2 money supply that's ever been printed over the course of a year. So we're on a very bad trajectory. And, I think everything that's happening is it's unfortunate. And I think it's horribly nefarious.
Yeah, you bring up a lot that in a way, Jerome Powell's insulting our intelligence, right?
Yeah. I mean, that's how I feel. I take it personally, which is part of the reason that I'm so annoyed. I mean, I didn't wake up one day and say, hey, I want to be Mr. Rail against the Fed guy, or it wasn't like I saw some Mark Farber interview and I was like, oh, I just want to be just like this guy. I examined what these critical points were being made by people like Peter Schiff, by people like Bill Fleckenstein, all of the Austrian economics people. I took into consideration their point of view. I took into consideration the point of view of people like Paul Krugman and leading economists. And I made a decision for myself. And at the end of the day, when I examined the evidence and I looked, the macroeconomy is not some great mystery beyond the realm of human understanding. It's pretty easy to just kind of figure it all out. It's basically a macrocosm of what would happen in a corporation or what would happen in your house. You have a balance sheet, you have an income statement, you have a cash flow statement. You can pretty much think of it like that. It's not too different. And so, upon doing that and examining it myself, the only conclusion that I could come to was it is nothing but a giant nefarious scheme. And, for benefit of elected officials and for benefit of people that are using it to their advantage. And so, I take that as an insult to my intelligence because essentially, look, whether they're doing it on purpose or they're doing it indirectly, whether they're just idiots and they don't know what they're doing and they believe their own bullshit, or they know what's going on and they're continuing to perpetuate this scheme, regardless, it's an insult to our intelligence, because the only way that they get away with it is if the majority of us don't understand it. And the fact that they continue to do it, and they continue to lie, and they continue to say things like inflation is transitory with such confidence, when you and I and anybody that's been paying attention with, more than 2 or 3 molecules of our brain understands that they have no clue. They don't even know what inflation is. I mean, I remember when Yellen was Fed chair, there would be Bloomberg headlines that crossed the terminal every day. Inflation is a mystery, Tom. She would say inflation was a mystery. They don't know, and here we are 4 years later, and they're like, oh, yeah, well, the CPI is 5%, but it's only transitory. It's like, you guys have no fucking idea. You have no clue. You guys don't have any superpowers that me and you and your listeners don't have. So don't insult our intelligence by lying to us and making us unwilling participants in this nefarious scheme that these people are running globally. And that's what's happening.
Yeah, it's funny that you say that, because I actually pulled a quote that you had on your Twitter. It says, U.S. Secretary Yellen says that I agree that inflation should not become ingrained in the U.S. economy. Meanwhile, our entire monetary policy for decades has been based around inflation ingrained in the U.S. economy.
That's an actual quote from her.
Yeah.
She doesn't want inflation to be ingrained in the U.S. economy. But like for 40 years, the economy has centered around inflation. All you hear about for the last 20 years is the Fed's 2% inflation target, which is a number they pulled out of their ass anyways. Mm-hmm. Never mind the fact that we don't ask the question of like why rising prices are good. Like, why is it good when everybody's cost of living goes up? Have we figured that out yet? Put that aside. Where does this 2% number come from? And then you get this imbecile who is completely incompetent and just absolutely clueless, who comes out and says, inflation should not be ingrained in society. So what is it? Do you have a 2% inflation target, or do you not want inflation to become ingrained in society? Because you can't have both of them. You got to have one or the other. And it just goes to show you, Tom, like, what's going on here, man? Is the tail wagging the dog? I mean, do these people literally just, have the IQ of tossed salad? Like, what's going on? Like, are they lying? Are they just imbeciles? Like, what's being taught in these schools? Like, what's going on in these PhD programs? Like, what kind of models, what kind of mental gymnastics do these people do to convince themselves that they know what they're talking about? It's probably a very fascinating experiment in human psychology too.
Yeah, I couldn't agree more. So, Chris, give us your weighted blanket analogy when it comes to the lower and middle class, and tell us what happens when this aha moment comes in inflation.
Well, what the weighted blanket theory video that I did that's on my YouTube channel was to try and describe what was going on with the whole GameStop saga. You had all of these people that were upset. Supposedly you had all these unsophisticated retail traders that thought that by buying GameStop, they were like sticking it to the man somehow, right? And they didn't really know who the man was, which was funny. They didn't know if it was like short sellers or if it was hedge funds. They knew they were pissed about something, but they didn't really know what they were pissed about. And they knew they were kind of getting screwed, but they didn't really know how they were getting screwed, right? Because, hey, the stock market's at all-time highs. Like, what's everybody so upset about? It wasn't like in 2008 when everything crashed. We were at a point where like, everything seemed to be okay. And, what I contended, my theory on what was happening. And then, of course, you had these congressional hearings, right, that followed, which is okay. Like, let's put like 24 completely incompetent members of Congress who don't know the first thing about economics in a room and have them start asking questions about the inner workings of broker dealers. I mean, talk about a fucking like waste of time, right? But everybody knew that there was something that needed to be, Tom, there was some bad elephant in the room and nobody knew really what the hell it was, but something had to be addressed and something had to be talked about because you had these kids out there and they were buying the stock and Robinhood said they couldn't buy it anymore. And what's going on, And rather than focus on Vlad Tenev, who I'm not terribly impressed with as a human being, or Robinhood, who obviously was having a liquidity issue as a result of essentially these people choosing to collectively manipulate the market. What I believe was that these people are pissed and they don't even know it just about, rising prices. They're pissed about what the Fed is doing. Mm-hmm. And, the misallocation of purchasing power that occurs when you have this massive quantitative easing. And you had all these retail traders, these unsophisticated retail traders that were like wanted to join in the fight, and calling themselves apes and calling themselves retards, online, like just saying like, hey, we don't give a fuck. We're the lowest of the low. We're the working class, but I'm throwing my $20 into this because I want to support the fight. I thought about that, and I honestly believe that like a part of that agitation is with the Fed, because when you are in the lower class and you're in the working class, and look, I grew up in probably, I would say, like middle class, like household. My dad, he was a mail carrier, and my mom was an administrative assistant, so I wasn't born with a silver spoon in my mouth. And I worked a lot of basic jobs. I worked as a dishwasher. I worked pretty much every position you could work in a restaurant. I worked at just like regular little convenience stores and stuff like that. And for years, even though I did have some help from my parents who were able to put together some scratch for me, for years it was digging under the couch cushions for gas money. It was going through the ashtray in the car, trying to find change to like, get through the toll booth. It was, all those little things, like trying to see if I could like put enough gas in my car just to get home on more than one occasion, like, being 2 months behind on rent, getting the cutoff notices for the cable bill and the power bill and stuff like that. So like, and I know what that feels like. And I know that the slightest uptick in prices or the slightest shift in purchasing power can feel seismic when you're struggling. When you work a job and you're making $12 or $15 an hour and you're trying to keep up with the rising cost of just having a like relatively normal quality of life where you just have a house and you have a couch and you have a TV and you have a bed and you can pay the bills. God forbid you have kids or dependents or something else you got to take care of. But the slightest uptick in prices sends a seismic shockwave through the lives of people like that. So like the analogy I made in my weighted blanket theory video was that every time the price of something would rise, or every time the Fed would print and purchasing power would be misappropriated to the wealthy people, because that's what happens when the Fed prints, right? They bail out the stock market. So everybody that's got financial assets gets this huge windfall, while people in the lower class, many of whom don't even have investment accounts or money to put in the stock market or keep their money in a bank, where banks will take $10 in fees a month, plus you can't keep up with inflation, and they won't pay any interest. It's the opposite. They get brutalized by this giant shift of purchasing power. And on top of that, you have rising prices. So it's like their dollar is worth less and prices are going up at the same time. And it's happening in the background, which is what makes it so nefarious. I mean, dude, we were talking off air. You're a welder, right? So like you go pull like one of your friends out of your shop. I work with people in factories. I've worked with welders and fabricators and, some of the best people I ever met in my life, man. And, plumbers and electricians and people that work trades and, bricklayers and like just the people that get shit done, the people that actually generate productivity in this country. And you pull them off the street and you ask them about things like this, and they don't really understand it. And it's not their fault. They don't have all day to sit around and learn fucking economics, because they're busy actually laying the bricks so that the, millionaires and billionaires can drive their limos from point A to point B in New York City. And so when you go to try to explain some of this shit to them, like many of my friends will ask me when we're out at the bars, like, what is it that you're talking about? Like, I kind of get it, but I don't get it. You ask about those things and they don't really have the time to try to figure it out. But all they know is that like, their coffee cost $1.49 yesterday and it costs $1.79 today, or it cost $1.50 yesterday and it costs $2 now, and they get 2 ounces less. And that kind of stuff adds up. And because this Fed machine is operating in the background, right? Because this shift of purchasing power, like, listen, man, if me and you are sitting around at our house and we're playing Xbox and just chilling out, and the Fed prints, $1 trillion overnight and it allocates it all to the bond market, There's nothing that happens like in our room, on our Xbox screen, on our phones that tells us what the effects of that are going to be. But what the effects really are like this machine in the background is essentially reallocating purchasing power away from you. So if people could see in real time what the Fed machine does and what inflation does and how they're being taxed and how their purchasing power is being like silently siphoned away from them, they would riot, but they don't. So what they get is they get this weighted blanket that kind of silently and slowly starts to fall on them until one day they realize that they're covered in it, right? And they can't move because the blanket is so fucking heavy and it's already just kind of like cloaked them from top to bottom. And that's the day when, they walk in to get their coffee and they can't because it's $2.50 and they only have $1.79 that they prepared, according to their budget, or they don't have the extra like 35 cents in their car's ashtray or whatever. And then you get people pissed off. And like that is what we saw with the GameStop fiasco. People were pissed and they didn't know why. And my argument is that this is why, because they're being subjected to this machine that's operating in the background, that's silently siphoning away their purchasing power, and they don't even know what's happening. It's like you back a dog into a corner and they don't even know why you're doing it, but all they know is they got to get out. And, people feel that way too. And they wake up one day and they realize something's terribly wrong. And even if they can't describe it, they act out. And that's why I thought the whole GameStop fiasco and the AMC fiasco happened. And that's where I thought there was a lot of misdirected hostility towards, short sellers who I think have more in common with the everyday person than people realize, when that hostility, I think, should be directed towards central banks and towards monetary policy.
Something else that I find interesting there, Chris, is as you're mentioning inflation and this idea that it's happening without anybody really paying attention to it or much attention to it, is the idea of measuring inflation by the CPI or PPI versus something like the Chapwood Index. So
yeah,
what are the differences between something like the Chapwood Index and CPI, and how does that really play into exactly what you're talking about?
Well, it's like it happens in the background until it smacks you in the face, right? Like you just said, inflation is this thing that's occurring that, I'm sitting here in my apartment right now and I'm just kind of looking around while I'm on the phone with you. And there's nothing in plain view here that would do anything different than it's doing now. If, inflation went to, 10%, everything would just kind of be the same. Like my bills would probably come in and look a little different, but there's nothing in real time that tells people that inflation is happening, but for the costs that they pay for items. And manufacturers have a vested interest in trying to keep costs the same so that it doesn't appear as though they're hiking their prices. So what they'll do oftentimes is give you less, or they will lower the quality of things. And sometimes you don't notice that.
Shrinkflation. Mm-hmm.
Right. Shrinkflation. Exactly. So sometimes you don't notice those things. The CPI and the PPI numbers leave out things like healthcare, and they, they make hedonic adjustments that are supposed to take into account increases in quality to products or services, instead of just saying like, hey, a 30-inch TV this year was $100, a 30-inch TV next year is $200. So, it was 100% inflation. What they'll say is, well, actually, the next year you're getting a better quality picture and you're getting a flat screen instead of a CRT. So when you factor in all those things, you go back and kind of like bake those all into the cake. Well, maybe inflation is just 10%. It's not 100%. So, they have all these little strings that they can pull to try to make CPI look lower than it is. And when you look at something like the Chapwood Index, which takes a basket, I think, of 500 items, pretty much everyday items like oil change for your car, bread and milk, your medical bills, your college tuition, the cost of a beer, the cost of, carpeting, and just any kind of like normal expenses. What you see consistently is that prices are rising between 8 and 12% per year. And that goes back 3, 4, 5 years in like, I think the top 25 major US cities. So when you don't fuck with the numbers and you just take them at face value, then it becomes clear that inflation is happening at a much more rapid rate than the CPI would let on. But the Fed has a vested interest in hiding it. And of course, they have a vested interest in making it appear as though they're maintaining control. And that's what happens by leaving things out of the CPI and by making hedonic adjustments for quality, supposedly differences. Then they're able to do that. So I just don't trust the CPI numbers. And I think if CPI is, 5% or 4%, then I think we should really be worried, because I think, the actual rise in prices is probably, significantly more than the 8 to 12% that something like the Chapwood Index said, while CPI was supposedly 2 to 3%.
Right. So, Chris, what about your thoughts around the efficiency of the markets right now? And maybe tell us a little bit about another one of your videos and your explanations around Bitcoin and the downhill side of these bubbles once they actually pop.
Well, I don't think there is much efficiency in markets anymore. A market consensus, like if you just want to talk about equities, like we can't talk about the bond market, right? Because the Fed is the bid in the bond market. So who the hell knows where bonds would be if the Fed wasn't in the market? So I would say there's zero efficiency in the bond market. The equities market, rises and falls with the tide of what is an apropos valuation multiple given the circumstances. Bulls now argue that, we have kind of crossed the chasm into a new era where, having a price to earnings ratio of 40 is normal because, we're going into the world of MMT and there's not going to be any more recessions anymore and everything can be bailed out ad infinitum, and if you're a traditionalist, an Austrian economist, you realize that stocks could probably fall 75% from here and probably maybe even still be too expensive then. So, the question of market efficiency with stocks is, what's an appropriate multiple for the market? And that is also impacted significantly by the Fed's ability to hold up the market, whether it's through buying corporate bonds or whether it's through, any type of quantitative easing that they can provide. They essentially put a bid under stocks as well. They're buying corporate junk bond ETFs. Like, what more do you want? That has an impact on the bond market, obviously. And that's why junk paper used to be a 12% coupon. And now I think junk paper is like a 5% coupon or something ridiculous. But, in addition to having an effect on the bond market, that also has an effect on the equity markets because it empowers people to take risk. It encourages people to put on risk, and low interest rates, the fixed interest rates, zero, the manipulated interest rates by the central bank also encourages people to put on risk. It encourages people to borrow and it encourages people to speculate. And so that can only go on for so long. But in terms of market efficiency, we're so far from a free market when it comes to something like the stock market, the equities market, that I don't even know if we would know which way is up anymore. The bond market is completely toast, right? The bond market, I just don't think is capable of selling off. Rates just can't go up. It's just, it can't happen. If rates went to 3% overnight, it would send a shockwave through the global financial system that I don't know if we would ever recover from. So the Fed can't allow bonds to sell off. So the bond market is pretty much fixed, and the Fed will do, I think, whatever they need to do to make sure that yields don't wind up rising. There's a little bit more give and play in the equities market, but look, how efficient can a market be if it only goes up, Tom? If you look at a chart of the Dow over the last 100 years, it's only gone up. So it's okay, so you just stop and think in any kind of market, is that normal? No, it isn't. You're supposed to have ups and downs in any kind of market, right? So how do you get a market to only go up? Well, you have to go in and essentially toy with all these different variables and micromanage it and manipulate it and fix the price of things like credit and intervene in order to keep that on that trajectory. And so to the extent that we have a little bit of efficiency bouncing back and forth, up and down while on the way up and only up, I mean, I guess there's some efficiency there. If you want to buy them at a 25 PE, you want to sell them at a 45 PE, like, okay, I guess that's buy low, sell high in today's market, but true market efficiency, like it's gone, man, and forget about it in the bond market.
Mm-hmm. Yeah. And that's kind of towards your point of these perma bears being wrong. And as you were saying, you can just look at the S&P, buy it and just hold it, and it's always going to go up, right? And
right.
The other part of that I would like to get your take on is how quickly things can change on the downside of these bubbles. And I mean, let's take Bitcoin, for example, and I'd like to get your thoughts towards kind of what side of that debate you land on. You have Peter Schiff on regularly, who's very against Bitcoin. And you also have Lawrence Lepard, who I've had the pleasure of speaking to many times. He's very pro Bitcoin. So where do you kind of land on that side of things?
Well, I think Bitcoin it's a great unknown. It can go either way, right? And Bitcoin is either going to be around for a very, very, very long time, or it's going to be one of the most spectacular bubble bursts in like modern monetary history. Mm-hmm. And, I was just talking to Peter Schiff about this. The bulls will argue that it's going to be here forever because it's essentially, moving a store of value into the digital world. And that, with monetary policy out of control, there's never been a better case to have some kind of store of value to kind of preserve your wealth, something with a limited supply. And there's a case for that. The thing is, everyone would have to buy in to the psychological argument that, Bitcoin is worth holding. And Bitcoin is the asset of choice for that instead of something like gold. And that's just difficult to do when you realize that it isn't anything. It's not a product. It's not a service. It's not anything. It doesn't provide any product or service for anything. And so, it's essentially nothing. It's code. You're buying, a spot on a digital ledger. I said to Peter Schiff a couple of weeks ago, you're buying a spot on a guest list to get into a club that doesn't exist. So you're standing outside in the velvet rope and you got your spot on the guest list, but there's no club, there's no DJ, there's no liquor, there's no dance floor, there's no nothing. And, the old school people, the traditionalists, the purists, the Austrian economists, the Bitcoin skeptics argue that, gold has achieved that spot, has kind of taken on the crown of being the wealth preservation, the asset of choice to preserve wealth because it also has commodity value. And so, I'm not sold that Bitcoin is going to be here forever and that it is going to be, the answer to reckless monetary policy. I can see the argument. I understand it, but I think missing the tangible aspect and, missing being a commodity and missing just being something that exists really is a big detriment because it then becomes reliant 100% on psychological buy-in, and that's got a Ponzi-ish feel to me. That's like essentially what a confidence game is, right? It's just requiring psychological buy-in. It's gaining the confidence of somebody else. It's just telling somebody that Bitcoin is going to be a store of value and hoping that they accept that, you're right and they'll feel the same way. Whereas with gold, if you tried to tell somebody it was a store of value and you gave it to them and they didn't even believe you, there's still a market for gold because you can turn around and it's being used in, consumer electronics and in jewelry and in all these, and in aerospace. And, it has all of these properties that no other precious metal has. So it's a commodity outside of being a store of value. And I think that that's a pretty strong case for gold over Bitcoin. So having said that, I'm 40 years old. I only know what I know. I'm not the smartest person in the world. I've been wrong about things before in the past. I own a small allocation to Bitcoin, probably not as big as Lawrence. I think Lawrence is like 85-15. I would say between my preservation of wealth investment, gold would be probably closer to like 90 or 95%, and Bitcoin would be smaller. But I do have some exposure to it because ideologically, I think the crusade makes sense. But I just don't know that Bitcoin's going to be here for the long term. I think that price discovery in that market is going to be very interesting. I mean, certainly the volatility in Bitcoin, I think, is normal. People kind of freak out about it. But when you're dealing with an asset with leverage that can't be intervened with or messed with by central banks, like you actually do wind up getting some price discovery. So the big, huge swings don't really surprise me that much. I actually see that as a good thing and not a bad thing. So Bitcoin bulls would be happy to hear me say that because they're always saying that shit. Mm-hmm. But I think it also works against it as being a case for, a store of value. You can't buy something to preserve wealth that the next day is going to be down 20%. That just defeats the purpose. So I prefer gold over Bitcoin any day of the week. And I'm not sure if I answered your question.
Yeah, absolutely, Chris. And, I appreciate you making that point. And that's something that I brought up in my discussion with Patrick Karim and Lawrence Lepard the last time I spoke with them, is really trying not to be married to whether it's gold, whether it's Bitcoin, understanding that this analogy that I've come up with is basically we have to have several monetary buckets in order to be able to capture some of this liquidity that the Fed is just raining down on every sector and hopefully, stay ahead of this inflationary wave, right?
Yeah, exactly. And, I just think part of the answer for me personally, because I'll be the first one to tell you that I don't know. Mm-hmm. And I'm not going to sit here and claim that I know what's going to happen, why it's going to happen, and when it's going to happen. I'm not one of those people. So for me, when I think about diversification, I think about it very differently than most financial advisors that you would go see in your local strip mall that are going to tell you to allocate to, just stocks and bonds, right? Mm-hmm. And then you're diversified. It's like, no. I think about diversification in a very, very, very broad sense. Equities here in the US, emerging market equities, dividend paying value equities in emerging markets. I want to have exposure to almost every country. I want to have exposure to numerous fiat currencies. I want to have exposure to gold. I want to have exposure to silver, palladium. I have exposure to uranium. I want to have exposure to Bitcoin. If it's an asset class and it's not total dog shit, I want to have some exposure to it. So, you got to think across currencies, you got to think across geographies and think outside the box too, which is really where Bitcoin falls. I mean, it's the wild card to end all wild cards. There's no doubt in my mind that, 10 years from the date of this interview, that Bitcoin is either going to be 90% lower or probably a multiple of what it is today. But I can't tell you which one it's going to be.
Yeah, absolutely, Chris. That's a great point. So in this vein that you're speaking of about these different fiat currencies, how do you see the role of the US dollar in the world today? And how is China basically playing chess while the US is playing checkers right now?
Well, I mean, the US dollar has just been, I think, absolutely defiled and just mangled to the point of no return. I mean, we have printed so many dollars. We've shown absolutely no interest in protecting the dollar. None. We print it ad infinitum. We think that, the money printer is the solution to our own, to every problems. We have central bankers like Neil Kashkari, who goes on 60 Minutes and literally tells, the world, not just the public watching, but world leaders. If you're a world leader, what are you thinking when Neil Kashkari says we have infinite money? That's what he said. We have infinite money. We have infinite dollars, so that's our attitude about the dollar. And look, if we were a creditor nation and we were producing everything and we didn't run enormous trade deficits, maybe we could flex a little bit like that, right? And we could say, yeah, we got the world's reserve currency, and damn right we do, for a reason. But we don't make anything in the country anymore. Peter Schiff always says the only thing we export is dollars. Mm-hmm. That's it. And that scheme implodes at some point. And I talked to Danielle DiMartino Booth about this, trying to figure out all right, well, what's going to catalyze the death of the US dollar as the global reserve currency? She thinks it's going to be a hot war, right? What will happen when we go to war? If we went to war with China tomorrow, if we went to an actual war with the country of China, if you don't think that they wouldn't be honing in on going after our currency, either by dumping treasuries or just by, putting a propaganda campaign out there that, the dollar's worthless and that they wouldn't cut off, all of the supply and all of the products that they ship over to the US. I mean, we import everything from China. We would be screwed if they did that. So they have all the leverage and they know it. The thing is with China that they play a very slow game. They're very methodical. I often worry, I worry about Bitcoin in China. I'm not sure, I worry about all these things about Bitcoin that nobody knows, like who Satoshi is and what the motivation is for this thing getting out there. As it's been threading itself through the financial system, I just can't help but think that something doesn't feel right about the whole thing, but that's just me. I know it's open source. I know we could track it. I know, all this other shit everybody tells me, but something about it just doesn't feel right. And, China, I think they're doing a digital yuan. I think they'll back it with gold. I do. I think if they want to issue the death blow to the US, they can start by backing their currency with gold, which is going to force the rest of the world to fall in line behind them. And, I just think we're in a very precarious and vulnerable position with our currency. And it just doesn't seem like we have any interest in protecting it. It just seems like, Tom, it seems like we're driving the car off the cliff at 100 miles an hour and we see the cliff and we're not even trying to slow down. We're just pressing the gas even more. And it just doesn't seem like anybody's interested in protecting the dollar. So I'm not going to be surprised when it loses reserve status in our lifetime, I'm sure. And it craters. And the dollar index, I think it'll crater against other fiats. And I think that will wake some people up too. Because even though purchasing power has declined and the dollar has, declined versus gold over, the last couple of decades, I think when it starts to sink versus the euro, and maybe one of these other countries starts to adopt something resembling a gold standard. The way I always envision it in my head is the Global Times one of these days, which is the mouthpiece for the Communist Party of China. I always kind of envision it that one day we're going to wake up and the Global Times is just going to have a headline that just says, Chinese economists considering pegging digital yuan to countries' gold reserves.
To the massive supply of gold that isn't officially known, right?
And we'll see a headline like that, and then that's all bets are off. Mm-hmm. Because if it comes from the Global Times, it's coming from the Chinese government. And it just feels like if I was Xi Jinping and I wanted to play chess, and I'm not the world's greatest strategist, but I think I could probably outplay several Fed governors in a game of chess if I needed to, that's what I would do. That's the direction I would be heading in, except they're methodical and they take their time and they don't rush and they don't make sudden movements. So we'll have to see. But I think it's playing out before our very eyes right now. And I think, again, in 10 years, we look back to this interview, I think we're going to say, oh, yeah, it was playing out at that time.
Mm-hmm. You're driving towards the cliff analogy. It's almost like the US has forgotten what that cliff means, right?
Right.
And what the consequences of it could be. And as we're talking about China, something that I always come back to is the idea of incentives. And with their system, how their incentives are actually set up versus how the incentives are set up in the US, in Canada, and in the West in general, right? It's get your constituents happy for the next 4 years, maybe 8 if you want to be reelected, promise all kinds of spending and let the next guy worry about it. Versus in China, it seems like the incentives are aligned exactly the opposite way, where they want that long-term success and they're aligned to be able to position themselves for that long-term success, right?
Yeah, well, I mean, that's look, China is probably the people of China are much more unified behind their government than the US. And that's, there's few benefits of communism, but that's one of them, right? I mean, if you walk down the street and poll 100 people in China and ask them if Xi Jinping's doing a great job, probably 95% of them are going to say yes. Whereas if you did the same litmus test here in the US and you asked 100 people hey, you think Joe Biden's doing a good job? You'd probably get a 50-50, right? And that's because we have a democracy. So people are empowered and emboldened to have their own opinions here and to dissent against things that they don't like from the government. And that's one of the great things about the United States and one of the great things about freedom and liberty and, being patriots. It's our patriotic duty to question the government. In China, it's your patriotic duty to say, hey, we're all here for the betterment of the nation. And, this guy is unilaterally going to decide what's best. So we're just going to follow his lead. So I think that just the vibe in general is different. What was the question again, though? Because I feel like I lost the thread there.
No, it was just more of a comment on the incentives of the way that their system is set up versus the US system.
Yeah. I mean, incentives in terms of what?
Well, like I was saying, is the incentive for any US leader to keep their constituents happy for the next 4 years and maybe 8, right? Versus being slow and methodical.
Right. And in China, the people will take what the government gives them, and that's it. There's no rising up. There's no questioning, authority. There's no, there's no certainty of a free and fair election, I don't think. Mm-hmm. I mean, certainly probably less than in the US. And so I don't think that they have that option. I think in the US, one of the benefits of democracy, as screwed up as our democracy can be sometimes, is that, we do have that choice. And so politicians do have that incentive to want to get reelected, which is, of course, why they make all of these terrible decisions to begin with, because it will stave off the problem for another 4 more years so they can stay in office for another 4 more years. But yeah, in China, I think they worry less about that, and they're a little bit more unified around, the common goal for the nation. And, if the government asks the people to bear the brunt of, producing less because we're not going to export as much to the US, then I think the people collectively will do that. I mean, they're rugged people, right? Like, they're a hell of a lot tougher than we are. In the US, we feel like we need to be comfortable at all times here, that we're deserved to be comfortable and entitled to be comfortable. And I just think that they're much more rugged individuals that would make sacrifices probably at the drop of a hat that we would question and have major problems with here. But, we have a different type of government, and we also have a lot of pros to living in the United States, obviously, that living in China doesn't have. But yeah, I think, there's less incentive for their politicians to kind of worry about getting reelected and things like that. Which allows them, look, when Xi Jinping stays in power for 20 years, he can lay out a different type of plan than, when a US president's elected for 4 years, and 2 of those years are spent transitioning, right? Mm-hmm. The first year and the last year are like transition years. So you really only have 2 years to get your shit done, whatever you want to get done.
Yeah. Yeah, absolutely. So Chris, how does this all play out for gold? Like, I know in one of the podcasts that I was listening to, you were saying that one day we're just going to wake up, and it's like Peter Schiff says, just because he's been wrong about saying that one day the price of gold is just going to skyrocket doesn't mean he's wrong in his thesis. It's just hasn't played out yet, right?
Yeah, exactly. And that's, I think, one of the biggest fallacies, with people that are critical of guys like Peter Schiff. I hate it when people say, oh, you've been wrong for so long, and he said the other day, well, maybe I've just been right this whole time, and you won't recognize it until the time comes. Mm-hmm. And then it's like a question of like, all right, well, is it really wrong if he spends 10 years warning us and then it really happens? Like, no, he was kind of right the whole time, and we should have been listening. And so, I think ultimately, because listen, I'm, just like everybody else in the sense that and Peter Schiff's my favorite economist, but like when I have him on my podcast and he says, hey, we're poised for this huge move up in gold, I can't help but think like, yeah, dude, you say that shit every time you're on my podcast. You know what I mean? And I love the guy to death. Like, he's the part of the reason that like, I enjoy the Austrian school so much, and I've learned so much from him. But like, yeah, you can't help but feel that kind of instinctively. Like, dude, you've been saying that forever. But so I had this moment like 2 weeks ago when I was doing my own podcast, and I was telling my listeners about it, where I had to actually think like, am I just believing a bunch of bullshit, or do I really believe that, this move is going to eventually come in the price of gold? So I had to step back, try to assess objectively, like, all right, what am I? Am I a Peter Schiff disciple, or am I thinking clearly and objectively for myself and making my own critical decisions, and I'm just arriving at the same point as him?
Mm-hmm. Sitting in an echo chamber.
Right, exactly. When I examined that, I understood how, I came to the idea that I could understand how it would possibly seem that I was just sitting in an echo chamber, but that I really do believe that gold is poised for this move upwards. It's just a question of when. And the big difference between me and Peter is Peter will tell you it's right around the corner, it's tomorrow, it's this, it's that. And I just can't put a timeline on it because it's an unprecedented experiment in monetary policy history. So I'm not going to sit here and tell you I know when it's going to happen. But what I can say is that mathematically, it seems like a certainty that we're going to have to return to some type of gold standard. When I look at things and I just tee this up with just some basic facts, right? One is the money supply is out of control, right? The second is the purchasing power of the dollar is declining, consistently. The third is we have a debt load that we cannot manage and interest rates can't rise. So we either default or we have to monetize it, right? Which I think the latter would probably happen. And that central banks hold gold in reserve. Now, why do they do that? So when I think about that, and I think about Russia and China buying gold, and I think about all those other factors, everything to me, all roads lead back to gold. All roads seem to lead back to gold for me, at least unless somebody can come along and change my opinion or show me something that I haven't seen yet, or maybe I'm missing some big part of this picture. But I do believe we're going to wake up one day and gold is going to, fly. And like Jim Rickards says, once it gets to $2,000, $3,000, $5,000 an ounce, then a 2% move is going to be $100 a day. So that'll become the norm. So then you're going to see these larger moves happen and it'll accelerate once it gets up there. And I think there needs to be some psychological buy-in too. People need to realize like, oh yeah, like things kind of are fucked. I don't know what that's going to take to get there. I don't know if inflation is going to do it or if it's just going to be, I think one of the other things could be a huge rotation out of crypto back into gold. All these people that got the idea right, that like, hey, the central bank is screwing up the works, but got the solution wrong. How do we preserve our wealth? Maybe we should take what's in Bitcoin and move it into gold. But I think we're going to wake up one day and I think gold will be up, $100 or $200 an ounce. And then I think it's just not going to look back. It may be when we break these new highs again. It may be years down the road, but there's no doubt in my mind that if we stay on the same monetary policy path that we're on, gold is going much higher. And that is why personally, I put my money where my mouth is. And I have probably 15%, maybe even more of my liquid net worth in gold, assets, gold equities, gold mining stocks, physical bullion, things like that. And again, I'm not the smartest guy in the world, but out of all the studying that I've done, and everything that I've read and all the interviews that I've watched and all the podcasts that I've listened to and all of the research I've done on my own. And I've been in finance now for over 10 years, just, basically working exclusively on exposing frauds. I don't know. It just seems to me to make the most sense.
Yeah, I couldn't agree more. And it just seems that this actually having something, to your point earlier, having a hard asset, having a commodity, having something that has other uses, that just seems to make the most sense, right?
Yes. Well, certainly to me, it does,
Excellent, Chris. Well, as we wrap up here, do you have anything else you'd like to add?
No, just that I love your podcast. And I think it's so cool that you invited me on because actually I invited myself on, but it's good. It's cool that you said yes, because I listen to it all the time. And I hope you just keep putting out great daily content the way that you do, because I drive a lot. And so it's one of my go-tos that I always listen to. And I hope that my listeners that have come over and listened to this interview all subscribe and listen to your podcast too, because I think it's wonderful.
Well, I appreciate the great feedback, Chris, and I would encourage our listeners to check out your content as well. You have a very active Twitter feed at QTR Research and Quoth The Raven podcast. And you can get it on YouTube, Podbean, Apple Podcasts, all the normal places, right?
That's it. Yep.
Excellent, Chris.
I'm out there.
Well, I really appreciate your time and your perspective today. Thanks, Chris.
Thanks so much, Tom. I'll speak to you soon.
Thank you. This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.